Hello everybody, this is the monthly trend scan of the futures markets here for the month of October. Let's have a look at US equities. So US equities has been in a long sideways range, right? Here sitting basically and sitting and testing the 21 moving average. So we had big days down and then again big days up. Well, this is an S1 pattern, so that triggered an entry and that was a failure, right? Whenever a failure happens, well, either it starts running south to the start of the momentum move, which would be the Corona spike low in March 2020, or we basically do a rebreak. So now we're in between these two lines. Either we get, we break lower. Currently we are testing 200, so that's a nice level of support. If the bears can push price below this recent low and can push it below the 200, well, then we're basically looking for the next level of support, which is the 21 moving average, and then basically going for this base, which is considerably lower. Now the entry signal on the other side, so we are here in this range, right? The entry signal is when this high, this last high, intermediate high, when this can be broken higher. So for the time being, we are overstretched to the downside. We could actually see a couple of weeks of very bullish momentum, and then price will show us what happens when it gets close to this green line. So overall, it's still very bullish, but we might actually not be ready yet for higher prices. It might consolidate further. This might evolve, transform into a turtle pattern, and we might probably see a touch of the 21 moving average. Let's have a quick look at the ES. Well, the ES looks similar here as well. It looks like we want to see lower prices. Now, the US dollar index future, the DX, has been a very important contract and indication for what other asset classes are doing, like metals and energies. So here we've got this up run, right? That comes as well from this short quarterly failure pattern, S1 short. So we're running up here. We had a huge run, right? Price goes vertical. We already had a couple of S1 patterns. So this pattern actually achieved its target. So now it might be time for a deeper consolidation. This is the minimum we would expect at 21, pullback to 21. Well, here as well, like on the weekly, we are over expected. So minimum, we should expect a 1 week drop, or we should actually at some point of time see a deeper pullback into the 21, and on the monthly as well, way overextended. We could easily see a pullback down to the 105 level, coming back to the 8 EMA, and that would cluster with the 21 EMA. So as well here, for the next couple of weeks, if not a couple of months, we could actually see some weakening of the US dollar, and that should have a positive impact on metals and energies. Now let's have a look at metals. Let's have a look at gold. So gold has been at this critical level here, right? Support level, stop run levels. If it breaks, we should see down momentum. We didn't see a lot of down momentum. I was expecting a big red bar. Well, the bulls are sitting here on the support, dynamic support 21. That seems to hold very well. And we now have to consider that this is an S1 pattern, because we are already touching the 21. But for an S1, well, we need a big red bar, right? So it looks like after a couple of days, weeks, or even months of higher prices here in metals, we should see another drop, a hard drop that produces a big red bar. Let's have a look at silver, because silver is already doing basically what we would expect here in the future for gold. It has broken as well outside of a range, and it has produced a decent sized bar, and it has as well tested this base level from this prior setup, right? Pattern. So again here, silver, I'm quite bullish for the next couple of weeks, if not months. Now let's have a look at palladium. Palladium is in a long stretch consolidation here on the monthly. Well, we had a volatile spike high. So whenever price comes back, well, there's a tendency to test that. So again here, we could actually have a couple of weeks of bullishness, especially as we're sitting, testing the base, testing the 21 on the quarterly, and as well being nicely embedded here in the 200 weekly. So that's a nice starting base, right, for higher prices for palladium as well. So let's have a look at energies, crude. Now with these, with the strengthening of the dollar, well, we see a consolidation, right, in the energies. Crude here, crude is as well is forming an S1 pattern here on the weekly, but timing wise, well, it's not yet ripe. Again, we need to see a sell-off, and we need to see a touch of the 21. The markets are really keen on getting back to key levels, and that would be a 21 touch. Let's have a look. It's very similar, heating oil and gasoline. Let's have a look at natural gas that basically has a life of its own, right? It's a great contract to trade. There's a lot of upside and downside volatility and move. So these big bars, monthly big bars, well, they can be traded on lower time frames nicely. The bulls had the opportunity to actually break out this level. That would have created a nice run higher. Well, there was resistance here, right, from the 200 on the monthly. So the bulls had actually would need to break this, but this as well is a stop run level. Well, they had the chance, they couldn't capitalize on. So what happens then? Well, then the market tests lower, right? That's what we see. That's what we see right now. We got a big red bar coming back to the moving averages. At that point of time, natural gas can do anything, right? So it could drop down to the 200 and this base level, or it can turn around now sitting on the 200 support, can turn around now and try a second trial to break higher. So we are open here to trade natural gas in both ways, whatever the market will actually show us to do. Now let's have a look at the interest rate futures. So the interest rate yield has gone up quite a bit. That means that the futures go down. The price of interest rate futures. That means an increase in yield, right? So, but we're still here in this very strong bullish trend for lower and lower yields. Well, this now is a big drop, right? Huge drop. Well, that was basically that was initiated here, right, as well with the Corona pandemic event, and then basically reinforced by February, the conflict, the Russian-Ukrainian conflict. So we're still here dropping, but dropping into a support level. And as well, we are overextended, right, heavily. We're still in an EMA trend, and we're sitting now on 200 support. Overextended, but we could actually expect a couple of months of bullishness and bullish bars. This is the 5-year T-note. Let's have a look now at the famous US T-bill. Again here, that's a Corona spike event, and then the dropping off hard. Well, we're still in a strong uptrend. We're only testing the 21 moving average, even coming down to the 50, testing prior support and resistance. Again here, we could see a bounce, right? A dead cat bounce, and that's obviously tradable too. However, should we break to a new low, despite this overextension, well, then we might actually see a quick move lower towards the 200 moving average. Well, then the markets would basically collapse, and we should see big increases in yield. So here we've got both scenarios, right? Either a decisive move higher, or if the bears are really strong, we should actually see a much bigger move to the downside. So interesting times here, and thank you.